Hi, we're Team No Sleep, and welcome to our presentation on open banking and the gig economy. This is going to be our exploration of the goals and that we have set for open banking in Canada. So what is open banking? Open banking is a framework built upon open APIs that will allow both retail and business users to authorize the use of their financial data to third-party services. In this presentation, we're going to go through what we mean with the gig economy, how open banking will help the users of the gig economy, as well as what Canada and Europe have been doing to approach open banking. And finally, we'll go through our implementation plan. So to understand what the gig workers need and who they are, we decided to go through a road of discovery. Here we broke down the gig workers into demographics and then started mapping out their struggles. After that, we started mapping out what the nature of banking systems is and how it affects their financial health, as well as find if there's a single group of people that have been underserved in the gig economy and in the financial sector.
The first thing we need to do is to define who are these gig workers. In our research, we define them as the people who are usually not employed on a long-term basis by a single firm. Currently in Canada, 70% of total employment in 2019 is gig worker. It's especially true for young people, as 40% of Canadian millennials have participated in the gig economy over the past 5 years, and for 30% of them are new immigrant in Canada. As the nature of the gig work is normally very low pay, half of the gig worker belong to the lowest two quintile of the total income distribution. And the median net income of gig worker is just roughly around $4,300 a year in 2016. So what are they struggle? Due to the nature of the work, there's unsteady employment. There's no guarantee that you're gonna get your job tomorrow. And even if you do, you not get the money right away. Most gig workers receive the payment after several weeks, even after they already fulfill the task or the job. And the gig employer here in Canada tend to pay by cash. That lead to the thin credit file situation for the gig worker, as there's no way for them to prove or show the record of their employment. The next problem is a little bit specific for the new immigrant, as there's no way for them to show their credential from their home country. Most employment opportunity and not reflect the ability or credential. So the gig worker get kind of stuck in a gig trap, which means that they're not able to keep up on the study and move on and move up with their career. And then finally, low income tend to lead to poor both physical and mental health for these gig workers.
So with the conservative nature of Canada's banking system, we need policy to push for greater competition and innovation in the space, which will also need to address the provincial regulations affecting the transfer of data across provinces, as Canada's pretty siloed when it comes to data mobility. The overwhelming dominance of the big five banks has resulted in slower innovation for our current financial situation, and thus we'll take a look at how the EU has addressed this and how it will affect immigrants as a whole. So when it comes to recent immigrants, they face most of the pains that regular gig workers would also face as well, such as the vulnerability and getting trapped into gig work, because that's the only way for them to support their family. With the current lack of tools and infrastructure for immigrants to access and manage their finances, overall, they're going to have a compounding effect. So imagine Laura here. She recently just moved to Canada. All her records are in her home country. The system is relatively new to her. She lacks a lot of access to these financial services, and they don't really have a credit for her. So how will open banking help with this? So open banking will help increase and speed up the access and transfer of data into and within Canada, which will be helpful in transitioning immigrants into Canada with the increased availability of APIs, as this will become a standard just like how it is for credit cards. Having a single major platform will allow current nonprofits, which are already tackling problems in their community, to better share their services to a wider audience. And recent immigrants will be a little bit more familiar if they did have open banking in their home country, such as most familiarly China and India. So let's take a look at how EU has approached open banking. So with the first policy would be their Payment Services Directive, or PSD1. It provided the framework for integrating the European markets into a single network and allow for non-bank payment providers to enter the financial sector and offer payment services. Innovation increased as a result of this. So with single euro payments area and interchange fee regulation, these two policies effectively put bank revenues at stake. So for the SEP, or single euro payments area, it brought cross-border payments to domestic costs and sped up the transaction by about 2/3, whereas the IFR, or interchange fee regulation, capped bank-to-bank fees for debit cards down to 0.2% and credit cards to 0.3%, which forces banks to find more innovative solutions. And finally, with the most recent PSD2 and GDPR policies, along with other security measures, this has accelerated the transition to a stronger open banking framework by providing the abilities for third-party providers to provide payment initiation services and account information services, which opens up the amount of services that these third-party providers a lot wider. So taking a look at what Canada has done so far, Canada has so far followed suit with exactly what the European Union has implemented, which is important as Canada faces very similar issues with innovation as the EU has. So with the recent introduction of Bill C-11, which is an act similar to the EU's GDPR policy, an act to protect consumer data and privacy, we are on the move towards open banking. To speed up transactions, the real-time rail system aiming to be implemented in 2022 will help ease financial management for immigrants, as it is essentially a faster e-transfer system. However, so far this is as far as Canada has come, so we would expect kind of following in the steps of the EU. The next potential steps would be targeting cross-border payments to lower the cost and speed up the transaction time, and also a PSD-like policy in order for Canada to start innovating in the space.
As my partner Brandon has said, all of our Canadian open banking implementation plans revolve around the passing of Bill C-11, which will allow for higher data privacy and higher punitive charges for bad actors, which we hope will incentivize the conservative banking system to start looking into opening their financial data to API builders. An introduction of a Canadian-made PSD2-like policy would also allow for smaller API builders to come into the platform and start building their own solutions. Our third stage would be to introduce open banking APIs in British Columbia and Ontario, because these two provinces are the largest provinces that have the largest amount of new immigrants coming in, especially from India and China, two countries that already have set up an open banking system. Our fourth step would be to introduce a platform specifically for new immigrants using grassroots systems like Prosper Canada, that are backbone systems for multiple nonprofits that are already trying to tackle the immigration issues that a lot of these new immigrants face. We hope to have the new immigrants be the champions of the product, because they already understand it. They don't need as much training in the system, and hopefully open up the stage to Canadian early adopters to start championing the product as well in our stage 5. In our last stage, we want to open up the banking APIs to other provinces and have a singular platform all throughout the country. Thank you for your time. We have been Team No Sleep.